Hey guys, it's Will here. I'm going to go through the markets again, but in a previous video I showed you guys how to set up a tab here with a multi-window screen. And so what I'm doing now is I'm just looking at the 9 of the US sectors, the main spider sectors. And this gives me a quick visual on what is doing well, what isn't doing well. I'm using Heikin-Ashi. If you forget how I did that, there's a tab down here, new layout tab. You go down, starter layouts. You pick the one, say with the 9 boxes and the chart. And the other thing that you should do is, let me just cancel that. Let's go to let's delete this tab. Close without saving. Okay, so if I go back to the sector tab, the other thing you should do is have a like a layout of the page. So this is like a Heikin-Ashi with a 50-day moving average and stuff like that. And that way you can use it in other subsequent charts. So this is where you you can open or save a chart. So this would be, say, for example, Heikin-Ashi multi-window. Because in the multi-window, I turn off the indicators that are underneath, like the price percent oscillator and the stochastics and the relative strength. So once you create a look that you like, you can save it as a chart layout, and then you can sort of set that layout for this particular window. And that way, it's easy to change them all, you know, so that they're consistent. So if I take a quick look at this on the daily, see that energy is kind of bounced up off the 50. So when you take a quick look, this is down, down, down on the daily chart. And so and then if you want to look at weekly, I'm not sure if I mentioned this in the other video that was for the multi-window, but there's this link here. It's called the time frame link. And you also have symbol links. So if these were symbol linked, every chart would have the same symbol. So if I change a symbol in one, it changes them all. But I've got time links. So if I change it to W, they're all going to change, because see the T, they all have that same color, T, T, T. So, and if I go to it's a quick way to just switch. If I look at windows, if I look at weekly, you know, obviously energy is good, but it's, you know, it's up a bit high off the 50. Financials are heading down now below the 50 week. Staples is still holding up, and you can see that, you know, on a weekly there is a bit of a pullback, but even it's still actually above volatility stuff. There is a pullback here. Utilities is pulling back on the weekly, but it's still, you know, it's still above the 50, but it is pulling back. Healthcare is pulling back. This one's broken. Industrials, discretionary, technology, real estate has kind of crossed down below the 50. So utilities and staples are potential areas, but not the exact right timing. And then if we switch to monthly, I can do that on any one of these charts. You can see that staples still looks really good. Utilities. Some of these are still up. There are some pulling back. So with a longer term time frame, you know, there's differences in what, you know, the status of the chart of the particular sector. But so if you're going to get in, you can use the fact that, you know, they're in a monthly uptrend as first criteria, like only focus on ones that are in a monthly uptrend. So that would avoid like technology, for example, and discretionary. So then you would go to the weekly, and if you look at the weekly, utilities is above the green volatility, but there is like a pullback there. So you could investigate that some more. Energy still looks pretty good. It's a bit flat compared to where it was, you know, initially. So you want to get in right when that first green, potentially in an uptrend, the first green candle here after like a pullback. So there are opportunities as this comes back and like these things start to recover. There will be opportunities on a whole bunch of these sectors. So if we switch back to the daily, you can see how they're all downtrending pretty much. Utilities is pretty flat with little dojis, and energy is still looking pretty good. So let's go back to, oh yeah, so if you want to get TC2000, check out the link in the description. You can get a free trial or $25 off your purchase. And let's go to another tab. So on the bottom here, there's these tabs I've got with different chart layouts. So Heikin-Ashi is the other chart tab that I have for just one single thing. So what I have over here is sector and indices. So if you want to create a tab, you know, different tabs, and that's why I like TC2000. TC2000, you have a lot of data here because each tab is a separate table in a small, you know, area, a small space. So the way I added sectors and indices, you go to watch lists and there's sectors and indices, and then you, like, once you have that, it pops it up. Then there's this crosshair here. You click on that, and then and say move, and then it shows you where it could be. So it could be one of the tabs that I just talked about. It could be a tab on this lower section. So I'm just going to hit escape, get out of that. So I already did that. I moved it to 2 tabs, sectors and indices. Oh yeah, one other thing I was going to mention. I didn't talk about it last time. These sectors, let me just open up one of those sectors again. So if we open up this window, you see it says XX90, SX70, 50. I don't know what those are. Like, it doesn't, unless I click on them, and then it shows me consumer defensive. So one thing you can do once you have or like when the sector watch list is on one of your tabs, you can go up to these columns here and say, insert a column, and it's going to be a value. And then if you type in company, there's this company name, and that represents normally a company, but in the sector, it'll represent the sector. So what I did was I put company here, and then I deleted that column that had the symbol, you know, SX50, 90, whatever. So now I've got energy industrials like right on the page. So that's pretty cool. Hopefully you understand what I'm getting at. So if you look at the sectors, which is what we looked at in terms of spider sectors, I have a column called 90-day performance, and that just shows you the gain in the 90 days prior. And you can see that only really energy and like 1% for utilities. So that shows you that pretty much only energy is you know, doing well. And then if you go to 30 days, you know, it's a shorter term duration. There's a little bit of a gain in industrial, but 4% in a month. And then if I sort by 5-day gain, energy again, and communication service, but you know, that's just 5 days. So from here to here, there's been a bit of a gain. But you know, utilities, it's not looking good. So really energy is the only thing that is of any real nice, you know, gains. So then if we go to the industry tab, I've done the same thing with the company so that I don't see those codes anymore. I actually see the names. So you can look at 90, 30, 50, 5-day if you want. So if we open up 5-day and say edit, it's just the close today minus the close 5 days ago divided by the close today. So that's a percent. So that's a percent gain for 5, you know, trading days. If you sort by 5 days, you're going to get local stuff that might be decent. But sometimes the sector doesn't necessarily relate to an ETF. But if you see like oil and gas equipment exploration, you can find ETFs that are specifically for that. So if we go like XOP, I think. So XOP says oil and gas exploration. If I say OIH, that says oil service. So there are some relations between, you know, them. And if you, like, obviously you could buy stocks. Like if I click on auto, then you can click on this open component watch list and see all the stocks within the auto and truck. And then you can scan these as well. So hopefully that helps you guys quite a bit. That's why I can go on and on about TC2000, but I highly suggest you get a trial and then sign up for the the monthly membership. And there's a link in the description below. I've got I've also got US real-time data, so I don't have a delay in the data for the US stuff. So if we go to markets, it's been kind of crazy. What's happening right now is there's a bit of a support point right here, but it's kind of breaking through that. And you can see these red volatility stops in the downtrend, and of course downtrending momentum. But if you get to a point where you will see a bounce and it'll come back. So I've drawn this line across the tops, and so you could get like a bounce, and then if you're going to short, like you could short here where it's breaking the downtrend or the support. But if it pulls back at some point and goes to this, and starts to fail off of that, or at this 50-day moving average or whatever, you can see how it kind of failed here at the 200, and then it failed again at the 200, and also that which correlated to the downtrend line that I drew here. So you've crossed way up here, so you're quite a ways along in this trend, but you could still go down a lot more. So, but you might want to wait until there's a significant sort of a pullback here, if you're gonna do like an inverse ETF or something. And S&P, it's supporting right now. It's kind of hanging there. So they're all kind of hanging there at their support points. Dow Jones as well. And let's go to IWM. So that is broken down a little bit below that support. And they all kind of have that same really negative price percent oscillator. So at this point, you could see some rebounding, not necessarily today, but just at some point. But on the other hand, it is breaking through the support at that point. So you have to decide what you want to do. If you want to buy breakout, or you want to wait for a pull, a rally and then another fail. If you look at weekly for these charts, you can see that there's red volatility stops and red candles, which is generally not a place you want to get in. Momentum on the weekly failed right there and then started to turn around. So you kind of wanted to get in, like say last week. But this is looking like, it's in a downtrend. If you go to monthly, you've crossed over back here. So this is where the momentum crossed down, and you can see the stochastics rolled down as well. And now this is the first month where it's a red candle with a dot. And you see here, there's been a whole bunch of months with red dots. Not necessarily a huge negative drop or anything, but even in 2020, there was only, two or three red months per se, but they are slow to respond. Like when you jump back up here, there was still a red dot until that following month. And that's based on the range of the volatility, of the price range of volatility. So, you will have a delay, but then you can ride that whole monthly trend up there. So if we go to NASDAQ, there's been more months that have red dots and downtrend, and the cross happened basically at the end of the year, or the beginning of the year, of this year, or end of last year. But so that's the ideal spot earlier to get in, to get out, to get out if you're long. But let's see. One other thing I'll show is another feature of TC2000 is that I added a column called above the V-stop monthly, weekly, and daily. So instead of clicking on each of these and seeing what the long-term trends are, like, so say for example, you want to get in on a daily trade, but you want to make sure the monthly and the weekly uptrends, the stock or ETF is in an uptrend above its green volatility stops on the monthly. And instead of going to each stock and clicking on this and that, you can create a condition column, it's called. So if I go insert column and then I say condition, and then I say above, because I've already written it, you go down, scroll down where it says above V-stop month, weekly, daily. So the way you do that is let's just edit this. I'll show you what it looks like. So using I'll just move it up here. Using these conditions that you can set by creating a condition, what I'm doing here is I'm saying mixed time frame instead of single time frame. So normally it'll be like for the week or the day. Price history is above the 21 and the 1.25 on a monthly. So down here it says monthly, and you click on the next one and it says weekly. So we're combining and adding conditions, multiple conditions, and then this one is daily. So when all three V-stops, when all three time frames have the price above the V-stop, which is green, then it would be a positive condition. So that column is right here. So if I click on HUN, which is natural gas, well, this is Canadian ETF, but if we look at monthly, we have a green, we're up there, big, huge uptrend, weekly, and then daily. And you don't have to put daily if you want to try to get in on the short term. You don't have to necessarily have it green on a daily basis. Like if it's red, you might want to watch it and wait for it to turn around. But if I can sort. So instead of sorting by percentages and all that stuff, I can just click on this arrow and see. I can just click on this arrow and see the ETFs that have all monthly, weekly, and daily above. So obviously energy, like I showed earlier, is only really energy. That's a hog, is also energy midstream. And this is $1, which it is true, but it's flat, like $1, US Canadian dollar exchange. It's not, you could potentially get into that if you want. But you can see here, when I look at the daily, the 90, 30 day, 5-day performance, it's like, 1 or 2 or 3% at this point. So, and the other one was HPF, which is also energy. But if we go up to the US ETFs, I've got the same thing here. So I'll just sort by, and there's only 5, or no, there's more than that now. There's, about 10. And we have United States gasoline, looks really good. And just to verify, I'll go to the monthly chart. That looks good. Obviously, you want to get in way earlier. Weekly looks really good. There's been, since the crash in March 2020, there's been a couple of little spots where there was some red dots, but basically, pretty much an uptrend the whole time. Energy I talked about. This is also natural gas, which is looking pretty good. XOP I talked about already, exploration. DXJ is Japan hedge. Like when I see this, it doesn't matter. Like, okay, yes, first of all, the 90-day, these performances are really low. And secondly, it's been in this choppy thing for a long time. So I wouldn't be getting that, even though like it does show that the green volatility stops. The other interesting one is 20-year treasury bill inverse. So it's, instead of buying TLT, you buy which is the bonds, you're buying the inverse of that, which is the TBF. And of course, monthly is just kind of starting, which is good. Weekly has been established for pretty much January, unless you waited till it got above the 50-week. And then on the daily chart, it's been a good run, so it's up to you whether you want to get in. The other thing is to look at where you've had these pullbacks and get in right after the pullback. So, we're a little bit along in this particular trend. Another one is DBC, which is commodities. It also has oil and gold. So gold, these things, it's not just the agriculture, but it's got a mix of things. So it's good to know what's in the ETFs as well. And wheat it did really well, and then it sort of had a pullback. So it's right at the 50-day, which could be supported there. But, since it's been this huge spike and it's been kind of pulling back since then. And then there's this one, cash cows as well. But of course, it is choppy. It's not looking great. And the overall 90, 30-day, and 5-day performance are not super great. UUP is pretty good. It's a US dollar bullish fund. And of course, it's looking pretty good. It's been a little bit along in the monthly chart, and weeklies, it's been quite a ways of up weeks. But of course, this isn't huge gains, like 6% in 90 days, 4.5% in 30 days, which is pretty good. And finally, in terms of the above the V-stop on all conditions is the cotton index. So if you go to monthly, you see how long since basically March, or not, a little bit after July, August of 2020, you've had this huge run. So it's quite established. But you get these little pullbacks and then it starts to go up again. So I think that's all I want to say for this video. Hopefully you gotten to see a lot of the features of TC2000. If you want to pick up a free trial or $25 off purchase, check out the link in the description below. I love this program. I use it every day, and there's quite a bit of power to it, and hopefully it will help you out with your trading. So talk to you in the next video.